It's about that time of day again. My name is Joseph. Wednesday evening, February 28th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bearish and trying to finish a measured move target tomorrow. And its aggressive move lower to finish off the month tells me I might need to be a little more aggressive tomorrow with my entries as well. The S&P is bearish with a strong measured move lower this afternoon, 3 measured legs lower to be exact on the Emini, and I have my eye on a hidden channel for selling opportunities up at resistance levels tomorrow morning. Nasdaq is also bearish and trading at the low of a channel, but the most important clue is the context of this market and how it finished the session tonight. We'll take a look at that Nasdaq in a moment. Over to gold. Gold is bearish with a spike and range pattern telling me to look for selling opportunities up above the high, and I'm watching a key reversal line up around that 1325 level for tomorrow morning. And speaking of tomorrow morning, euro is bearish with a spike and channel pattern. That's right, we were expecting this thing to jump back into the range, but those bears just wouldn't give up. So the euro's bearish, spike and channel pattern, that tells me exactly where to be looking for those selling opportunities for Thursday's session. Boy, I got a great newsletter in store for you guys and gals tonight. We have a ton to cover. We got some spiking channels, we got some hidden channels, we got some ranges, and some triple, quadruple measured moves. We're going to cover all the details and put together a great strategy for Thursday's session in just a moment. Before we jump into the charts, though, I want to remind you, if you're on YouTube right now, don't miss another video. Make sure you subscribe to the YouTube channel. Click the bell icon so you always get notified every time I post something new. And I'm going to cover a lot in tonight's video, so if you have any questions, you can post those in the comment section below that YouTube video. If you're here on the blog at sidewaysmarkets.com, this is our main trading blog. All the good stuff, right, is posted here. If you're here on the blog here at Sideways Markets, or if you're on the YouTube channel, you can find a link in the description of that YouTube video, right? Follow me over here to the blog at Sideways Markets. While you're here, don't forget, you'll never miss a beat by joining our mailing list. Give me your name and your email address. Promise, 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 no wasting time with spam. I will send you only the good stuff that we publish here every week at School of Trade. And while you're here, don't forget, I save the best for my social media channels, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice on social media these days. I'm always posting exclusive content. You won't find it anywhere else, so make sure you guys follow me on social for charts, links, updates, right? Different strategies throughout the day and week on my social media. And speaking of charts, how easy is this? All the charts from tonight's video, that's right, you can have them on your computer for tomorrow. Don't waste any time. Grab those charts. Use them for tomorrow. If I don't see you guys, obviously, tomorrow in our trade room, right? You have those charts ready for your day tomorrow. And speaking of the trade room tomorrow, what are you waiting for? Grab that free pass. We continue to have standing room only, full house every day on that free pass. So grab that free pass in the upper right-hand corner. If you're not a member here at School of Trade, find out what everyone's talking about. Grab that free pass in the upper right-hand corner. Come join me as a guest in the trade room. And again, if you have any questions, you can drop them in the comment section on the YouTube video, or over to the right-hand side of the website, I have live support on all the pages to our website, right? That way you can always reach out and ask for help if you need it. All right, guys? Boy, what a great day today. Hope you guys had a great Wednesday. But, of course, we're see ya to the month of February. Tomorrow is the beginning of March. I can't even believe we're already talking about the third month of the year, 2018. This is always a great, great month for many different reasons. We got weather starting to change a little bit here in the Northern Hemisphere. We got time change, right? Daylight savings time for most of us, right? We spring forward for an hour. When is that? Not this weekend, but I think it's next weekend is daylight savings time. And we also have the end of the first quarter, right? Obviously, the end of the month of March, and that always increases our volatility and gives us a lot of great opportunities. So I love the month of March. Tomorrow is the first day of the month, and anytime we have the beginning of the month, there's a couple things you want to keep in mind. First of all, oftentimes the analysis begins at midnight on the new month. Now, why is that important? Well, you may or may not have noticed this, but my charts always use the Globex session, which for most of the futures markets, the open is at 6 p.m. Eastern time, right? And it closes roughly 5 p.m. Eastern time, right? I know that seems backwards, right? Opening at 6 and closing at 5, but that's what it is, right? So it'll open at 6 p.m. tonight in Asia, go through Asia, through London, through the U.S., and then close at 5 or 5:15, right, p.m. Eastern time. So that's the typical, right, times and time session that my charts will use. A lot of times at the beginning of the month, and I can't tell you why this happens, but I have a funny feeling that it's just kind of a common way for everybody to start new is it opens at midnight. So the market will open at 6 p.m. In just a few minutes here now as I record this video. But be aware tomorrow, if you're trying to find channels, trying to find ranges, if you're trying to make sense of what the overnight session, which is what we do every day in our trade room, we come out at 8 o'clock Eastern time. We try to make sense of what happened overnight, and we use that information, right, to plan our trades for the rest of the day today. Well, the bottom line is don't be surprised if overnight everything starts at midnight rather than starting at 6 p.m. right the previous evening. All right. If you need more clarification on that, shoot me an email or drop me a comment below the video. But if you're an experienced analyst, you probably use 6 p.m. as your open, right? 12 a.m. on March 1st, right? So Thursday morning, 12 a.m. oftentimes is the kind of the official beginning of that new month. So just keep that in mind for tomorrow. We have no major news in the overnight session. Tomorrow, of course, being Thursday morning, we've got your typical jobless claims tomorrow morning at 8:30 a.m. Jobless claims isn't usually going to move the markets too much. It is listed as a Red Star news event, but typically that's not that big of a deal. We do have personal income, though, tomorrow, which hopefully that will get things moving early. And then we go down to 10 o'clock tomorrow morning. 10 o'clock, we get the ISM Manufacturing Index. Always expect to see some increased volatility at 10 a.m. Eastern time every morning, Monday through Friday. And then, of course, we also going to have that second day, right, of my boy Jerome Powell, right, talking in front of Congress, right. Tomorrow, he'll be testifying in front of the Senate Banking Committee. So we do have potential for a little bit of slowdown around that 10 o'clock hour. So you know what I always tell you guys when it comes to these speaking engagements, right? I'm not expecting any big fireworks tomorrow because of it, because the fireworks most likely happened off the first, right, testimony on Tuesday morning. So I'm not expecting things to be as explosive as they were on Tuesday. Just keep an eye on the time as we get closer to 10 o'clock. If things start slowing down, don't force it. Let it kind of get through that Powell speech, right? And then we can get on to the rest of the day from there. So again, watch midnight Eastern time tonight for the official beginning of the new month of March. We got some. I don't expect this to be too big of a mover tomorrow morning at 8:30, right, for the jobless claims and personal income, but I do expect, right, that 10 o'clock hour to be on our radar and be a big deal, right, tomorrow morning. Other than that, we got a pretty wide open session outside of that Powell speech tomorrow morning at 10 a.m. Eastern time. Don't forget, we'll be in our trade room 8 o'clock Eastern time like we always do, right, executing the strategy in a hands-on environment. That's why I always tell people, right, trading is a performance skill. It's not enough to read a bunch of books. You can't learn trading unless you actually get out there and trade, and our trade room is a fantastic place. It opens up every morning, 8 o'clock Eastern time. All right, enough about that. We got some charts to cover. We got some strategies to work on for tomorrow. And if we can do half as well as the strategy did for today, right, we're going to have a great Thursday session. How about some oil first? We're going to go oil, S&P, Nasdaq, gold. I'm going to wrap up tonight on that euro. What an interesting session today it was on the euro. All right, starting tonight with crude. Oil is bearish and trading at the low of a channel, just a few ticks shy of the measured move target for the sellers. The channel tells me to look for selling opportunities up near those highs, but looking at the strength of this move combined with a measured move still waiting to be completed, this tells me to be open-minded to a more aggressive strategy for tomorrow as those sellers try to finish off, right, this measured move. Now, as I look at this chart, the first thing that comes to mind is those bears are inches away from reaching what we call the objective. And here's a way of thinking about it. In a bear market, the sellers will keep selling sellers will keep selling until they reach their objective, right? If I can spell here, right? In a bear market, sellers will keep selling until they reach their objective, right? So we have the objective sitting down here at the measured move. Combine that with this strong move down to finish off the session. You know, I would love to think that this major bear channel, I would love to think that we're going to go all the way back up to that channel here for tomorrow, and hopefully we do. I mean, that would be definitely where the big money is going to be made tomorrow, right? Nice big wide open space below. But in all reality, we just may not see the sellers let it go that far, right? We may get right above that, right, 88 kind of failure, and then back down to finish off, right, that measured move. So, you know, that kind of unfinished business, right? In a bear market, sellers will keep selling at resistance until they reach their objective. That tells me there's still some unfinished business waiting to be completed, right? Waiting to be finished with that measured move tomorrow. And when I combine that with just this sheer strength down, right, I definitely have to be open-minded to a little bit more strength here to the downside. As you can see, this channel is a very large channel, right? This is kind of a hidden channel here, really. It's all kind of resting off of those lows up to those highs, and you know the giveaway, right, is that midline, right? That midline is definitely the giveaway there. So that's definitely our channel here right now. I'm going to show you a few more channels here tonight on the E-minis that will kind of show you some different variations of this, but this is the best fit here for now. So channel, right, measured move, and basically I'd like to see something like this again tomorrow, right? So bring up, we'll go up, down, and sideways. If we go higher, up above the moving average comes over, we pull back to the moving average, right? Can I think about right back here, right? Pull back to the moving average. Buyers try to buy that pullback. We know where their stops are now, and now we can sell into their stops or wait for the breakdown and sell into that pullback, right? So those are a couple examples how we can sell as the market goes higher. And obviously we get the reversal line up, get the battle zone, get the trend line over here. So really anything, right, up and back down from there, up and back down from there. You know, I don't care where it happens. I just want to get up to a level of resistance. What if price goes sideways here tomorrow? Yeah, what if price goes sideways? You know, we might come in tomorrow morning. This thing may have already hit that measured move, and we might start being a little bit sideways here as we go lower. Anytime a bear market stops making lower lows, right? Think about it. Anytime a bear market stops making lower lows, it doesn't reverse the trend. It just means we're bearish, but sellers are going sideways now. And it basically tells me that we are rejecting the idea, right? We are rejecting the idea of those lower prices. So if they're rejecting lower prices, what should I do? I should focus on selling at higher prices, right? We know that's the rule of thumb for a bear market, right? Sell at resistance. So when we have a range like this, you want to be thinking up, one try, two try, and then sell back down, right? Look at that failure, up and back down from there. Hey, maybe we get a chance to use the top of that channel at that point, right? So we look for that level of resistance overhead here. What if price keeps going lower? What if price keeps going lower? We may see this turn into a spike and channel tomorrow. So watch that as it goes lower, right? That wouldn't surprise me one bit here to have this thing kind of grind lower. And as you're going to see in a moment on the euro, right, spike and channels always tell me the base of the channel, right, get up, and then let's sell this sucker back down again, right? Get the up towards the base of that channel, right? And then sell it back down again. Again, hopefully we get a chance to use, right, that falling resistance trend line. So that's if price goes up, if price goes down, and if price goes sideways. How would we reverse? Is there a possibility for a trend reversal? Absolutely. There always is, right? There always is. These are the futures markets we're talking about, right? These are volatile markets. What would a reversal look like? Well, first thing is we'd have to see a strong move up. I'd want to see it try to hold above this trend line, right? Because obviously anything underneath it, we're still susceptible to that drop back down. And then I'm going to want to see that strong move higher. The key is going to be, as I always kind of, right, that kind of mantra we have on this YouTube channel, right? Strength, pull back, right? Strength, right? Strength, pull back, strength. That, right? Strong move higher, right? Strong move higher, pull back to the moving average, strong move higher, right? You can see here, strong move higher, pulls back, no strong move through. Strong move higher, pull back, no strong move through. Every time it pulls back to that moving average and it fails, sellers there take it back down. It pulls back to the moving average, fails, bears are waiting to sell it back down. So they've got to get that strength, pull back, strength, and it should go up, pull back to the moving average, and then explode higher, right? Exploding higher, that will be your key, right, to get in that market reversal. If we do get the reversal, we'll find a new channel, a new measured move, and we'll go hunting for, right, those highs that make up not only today's session, right, but those highs from previous sessions here as well. So we'll keep an eye on that if we get that reversal here tomorrow. If not, we definitely have that $60 a barrel area, that big round number, lots of zeros there, right? And that will definitely be calling those sellers, dragging that market lower here as we go into the month of March. Let's keep rolling. How about some S&P now? S&P is bearish with a strong measured move lower to finish today's session, giving me just enough information to draw a hidden channel and start looking for selling opportunities up near the highs tomorrow morning. Kind of an interesting chart here on the S&P. S&P, right, looks a lot like a trading range there. The problem though is this move lower is really, really strong. So of course, anytime we see a strong move in one direction, we typically see the market go up and then back down to retest that low. So the most important thing right now is the strength of this move lower. Anytime I see a market move that strong in one direction, look for that two-legged pullback and then a retest of that low, right? Kind of the momentum of the market will drag this move back down again. It's a very, very important part of your analysis, is always thinking about, right, where is their objective and what is the context, what is the market sentiment, right, as we move lower. Speaking of market objective, you can see here one leg, two legs, three legs lower, triple measured move down there at 27.15 and a quarter. And you can definitely tell there's that big round number at 2,700. There's getting closer here by the day. Tomorrow might be the day we make that thing happen. Now, of course, with that strong move down, you really can't draw much of a channel off of that high, right? I've drawn my resistance trend line here. You really can't get that channel to make sense, can you? Yeah, there's no channel there. You can see they tried to hold on to it. Poor buyers trying to buy the low of that channel there. It's a bear market. You don't want to buy that. But you can definitely see, though, they definitely ran right on through that. So because that bear channel, which you'll normally want to draw those bear channels off the highs, because it doesn't fit, right, now we'll do is take those lows, draw it off that low, pin it up to the top there, right, and now look for that to be, right, kind of a hidden channel, right? That brings me in now to a reversal line there at 27.5, prior swing at 35.75. You know, in all reality, this battle zone could be up all the way to the bottom, right, of that range here, right, up and then back down we go. So we got a channel, we got some measured moves, we got a battle zone, we got a reversal line, right? There's no shortage of information on this chart right now. Most important thing is that strong move down tells me up and back down again. Strong move down tells me to find that hidden channel, and the hidden channel gives me a key level of resistance to sink my teeth into tomorrow morning. What if price goes up? What if price goes down? What if price goes sideways? This will be a little similar to the crude oil analysis, right? Up above that moving average, bounce off resistance, right? And again, think about these moves right here, right? Every time they go above the moving average, what happens? Bulls get run out, collapse back down, back to the moving average, right, and down from there, right? So a couple different options there coming off of that high. It's a little bit tough to tell how far it will go, but I definitely want to do it up around the high of that channel. What if price goes sideways here? Yeah, it definitely looks like it might be getting comfortable down here around this range, around this measured move. So if we don't see sellers taking their profit, you know, and nobody else wants to buy this thing, if it keeps going sideways, remember, in a bear market, we start seeing double bottoms here. That tells me we're looking at a range, right? That range would tell me look for that 1, 2 failure back down, right, above that high. What else here? What else here? Maybe a possible flag pattern here for tomorrow. That wouldn't, you know, flags are relatively rare, right? If we start seeing higher lows on this, get up above the top of that channel, right, and sell back down from there. All of this comes off that strength, right, going lower. So possible flag for that tomorrow. And then what if we keep going lower? if we keep going lower, oftentimes these channels, right, they kind of end up being kind of like a midline there, and that midline ends up being kind of like a spiking channel almost. So let's kind of draw that up here right now if I can get this a little bit flatter there. So if we end up going sideways here tomorrow, kind of just bleeding down this thing, right, it's going to be a spiking channel pattern, and that tells me find those prior swings. Don't sell low, right? Wait to sell high and sell with that trap high, right, up overhead here. Okay, so you know the game plan if price goes up. We got a game plan if price goes down. We know what happens if price goes sideways. How do we reverse here right now? Well, as I mentioned on oil, we get that trend line coming down here. So first step is going to be a strong move up. Second step will be a pullback to the moving average. And in all reality, we're going to have to see a nice strong break higher through that trend line. If we do get that, I'll draw a trend line up off that high, bring it up for a hidden channel, and we'll look for that buying opportunity here between that moving average, right, and the low of that hidden channel. And in this case, with that trading range, the objective becomes pretty easy now, right? In a bull market now, the buyers to go back to retest today's high, just around that 58.5 area. That'll be a key level of resistance to be used for those buyers here tomorrow. So really interesting charts there on the crude and the S&P. Hopefully they continue like this. Very, very easy patterns to find. And of course, that makes it easy to be confident about your trading as well. Shall we keep going? The little sister here of the S&P over the Nasdaq. Nasdaq is bearish, obviously bearish, and trading at the low of a large bear channel. That tells me the most reliable selling opportunities will be up near the high of that channel. However, this move lower was quite strong, right? This move lower wasn't kidding around here this afternoon. And so with that strength, honestly, I'm not sure if the bears are going to let this price retrace that far off these lows. So much that we talked about on oil, right, we've definitely completed the objective here right now. There's no real measured move to draw on here. You'll notice I don't really have any measured move to share with you guys right now because unlike on the S&P, we did get a new higher high here. So a measured move would probably look like this tomorrow, right? Some sort of A, B, C, D like that tomorrow. But, in all reality, though, so strong going lower here, I wouldn't be surprised if we come back around this area here tomorrow, get those prior lows will act as resistance now. I wouldn't be surprised here if we end up right around that battle zone and then right back down again, right? Because we get that strong move down. Anytime we see that strong move down, right, we're expected to see that up and then slam back lower as sellers keep selling into this move, right, as it goes higher. So really a very, very interesting chart there on the Nasdaq. Most important thing, though, is that strong move down. You'll notice I'm going a little bit, I don't want to say I'm stretching it here on that channel right now, but you can definitely tell, though, yeah, see, it looks great. I mean, look at the channel, right? There's your midline, your lows, right? Your highs. I mean, yeah, it's ugly, right? It ain't pretty. It ain't pretty like that oil channel, right? But it definitely looks the part, right? It looks like we got some good rotation, beautiful trap high up there for those bears to sell off that high. That was in the battle zone from last night's newsletter. And now we go screaming lower here. So again, without sounding too much like a broken record, what if price goes up? What if price goes down? What if price goes sideways? Up above that moving average, failure, strength, pullback, and back down we go. Failure, strength, pullback, and then back down to retest that low. You'll also notice here I'm kind of drawing in a little bit of a hidden channel there, that little guy right there, right? So, if we do end up going up, right, that will be your target, right, on the way down. Heck, what do I know, right? Maybe we go all the way up here and we bounce off that high, right? Combine the two, right? Then you get the top of that channel, that hidden channel. Boy, wouldn't that be, right? Wouldn't that be amazing here for tomorrow? Get a beautiful example there of a bear channel with a grind break. Would love to get up around that resistance. So it doesn't really matter what resistance level we use. We're looking for a specific pattern coming in at that level of resistance. And hopefully we get that high as possible here for tomorrow. Strong move down. Yeah, there's definitely potential. This market might go sideways here. If we come out tomorrow morning and we're seeing this thing just double bottom here at the low, right? There's your range. One try, two try, right? And then back down in on that second attempt, right, to break higher here, right? That'll be the chance for the bears to get short above the high of that range. And then if we go lower here, right, if we go lower, if we keep kind of grinding lower, right? Wouldn't surprise me with the strength of that move today. If we keep grinding lower, not much changes. We don't want to sell low. We don't want to get caught, right, chasing after it. So wait for that market to go up, right, and then look for that sell coming down off of that high here. All right, guys, so looking to sell high, looking to sell up above those levels of resistance. Other than that, that's about all we have to work with the bear side here. What about the upside here tomorrow? Could this market turn bullish? It obviously could. Anything can happen here, right? The minute we start thinking it can't happen is the minute it will happen. So I'm always keeping my eyes open for that. Strength, pullback, strength, right? That moving average will have to come over. They hold that pullback at that point now. Find that new channel, right? Be that buyer off that, right, off that low. And of course, the objective at that point, we assume will be originally that 70 3/4, but you get that big round number up there at 7,000. That'll be a really easy milestone, right, to be hunting for here for those buyers tomorrow. So get above all this level of resistance. Make sure you show me some strength before we start thinking about being a buyer on this, right, because you don't want to go trying to predict reversals, right? Predicting reversals, you will die a death of 1,000 cuts. How about some gold? Right? How about some gold over there? We got any gold going on? Boy, it was a slow day today on the yellow metal. You know, I talked about this last night in the newsletter. Oftentimes, the end of the month is really volatile, but apparently the euro and gold did not get the email last night, right? Because gold just didn't do much at all here today. We kept on, trapping high. Remember, we had that, right? We had that. Where's my cursor here? We had that. Oh, come on, Joe, get your act together. We had that. Right, that prior swing here, and you can see everything went up, right? Back down, up, back down, up, back down. So we were definitely on the right track trying to sell high here, but they didn't give me what I really wanted today on the gold. I wanted the thing to really jump up to that 24.9 area so we could sell it back down. So didn't quite get that, right? So we're definitely bearish, but now we have kind of like a spike into a range, right? Spike and range patterns. Spike and range patterns, they tell me to look for selling opportunities up above the highs using buyer failures and the 2-try rule. I still have my eye on that 24.9 reversal line, which will make for an easy resistance level going forward, right, for tomorrow. So we got that, again, that strong move down in yesterday's session. We were looking to get that jump up so we could sell it back down. All we got was some really small traps, right, in a very, very sluggish market today. That creates a range, flat moving average. Anytime we have a range, we know 1 try, 2 try, right, and then back down in. Again, I would love to get that 24.9 area incorporated. We should be able to get that tomorrow, just because you're going to probably see that break above that 23.7 at some point, right, tomorrow morning. So up, 1 try, failure, pull back and back down, same patterns, just different market. The hard part will be if we go lower, right? 1 try, 2 try, back up in. Now, my advice to myself is always, if I'm going to take a trade going with the trend, I can go full size position. But if I'm going to try to trade against the trend, this obviously the trend is bearish, right? My best advice to myself would be go with a half size position, go with a quarter size position, right? Go with a minimum 1 contract position. If you're going to be using that 2-try rule to buy below the range, you got to remember you're going against the momentum, right? The current of the market's moving lower right now. So trying to be a buyer, and I know that reversals can be tempting, but you got to be thinking, well, here's the reality. Our brains are really good at pattern recognition, but our brains are not very good at probabilities and complex math. Our brains are really good at pattern recognition, right? But we forget, we think too quickly. We don't go into that level 2 thinking, right? As my buddy Daniel Kahneman says in his book, Thinking Fast and Slow, right? We don't go into that level 2 thinking where we don't think 1 step further and we don't think in terms of probabilities, right? So our brain says, ooh, pattern, right? But the brain needs to go, ooh, pattern, but wait a second, it's not a reliable pattern, right? That's the problem. All we see is dollar signs flash in front of our face. We don't see, right, the red numbers, the stop losses that come more often than not when we go against the trend. So that's the key here, right, for those buyers going lower. If you are going to be a buyer at those lows, be careful, trade small, right? Keep that stop nice and tight because it will oftentimes roll right over, right, and stop you out. So you better just keep the bleeding to a minimum if you're going to take that, right, that type of trade. So one try, two try, back down in, one try, two try, back up in. How do we go? Obviously higher and lower here. How do we go lower? Well, going lower, this could be a very strong move down. I'm going to want to see a move, get that moving average below, and then I can use that prior support as resistance. Does that make sense? Right? Does that make sense, right? So strong move down, hold the low of that, right? Get that moving average below. That's what I need to get this thing going lower here tomorrow. All right? So don't make that mistake that I made early in my career where you do this. Right? You sell into that pullback, you get stuck down here, and then right back up again. Right? That's a two-try rule for the buyers. Okay, so don't make that mistake that I did. Wait to get that strength going lower. And then honestly, the same thing kind of applies to the buy side, right? How do we reverse the trend? Strength. Yep, pullback. And then what? And then strength. The key on this is it's got to really push higher here. Because what you're going to see happen is it's going to go up, it'll pull back, it'll look very tempting, but then bam, right back down into that range, right? So do not be surprised. I talked about this a little bit last night in my rant about the dollar index last night. Don't be surprised if you see that higher high on that second try, but then it ends up rolling over, right, and dumping back down. So in order for this to get a good breakout, strength, pullback, strength, that will usually get that moving average running higher, grab that new hidden channel, right? And then we're off the races being a buyer off that, right, off that hidden channel. And of course, the goal of that now is to get all the way back to where we came from today, right? That 38.5, which won't be an easy task, but if the bears lose this, right, all the sellers who are holding on to positions now on the way down, they're going to get out. They'll become buyers, and this market will jump back up to retest that high. So be aware of that for tomorrow. And then the totally just the uneventful chart of the day today. Boy, this euro, like I mentioned last night, I was hoping we would get that two-try failure, right? If you recall from last night's newsletter on the euro, I was hoping we'd get that one try, two try, and then get that jump back up. But this thing was just like a wet noodle today. I mean, it just kind of kept grinding lower. It was slow as death, right? I mean, it was just horribly slow. Again, like I mentioned earlier, apparently the euro and the gold did not get the memo about the volatility into the end of the month. So clearly now at this point now, this market has it's answered the question as far as, are there going to be buyers at the low of that range? At this point, whatever buyers were there, they're not making any dent on this. And so at this point now, like a good trader needs to do, is abandon my previous analysis and just look at what's happening right now in the chart. I get questions all the time, Joe, why do you go from being bullish to bearish just so quick? And I say, well, because that's the chart tells me. You have to be okay with being wrong. It's not that you're wrong. It's just the analysis I had. I didn't buy it, right? We didn't get the signal to buy it. So there's no harm done. Yes, I wish I would have sold it yesterday, right? But you can't predict the future, right? All you can do is look at the environment, use the market's context, think about what's the most probable, and then execute with confidence, right? That's the only way you can really do this. So don't beat yourself up about this if you missed the move lower, right? Most people probably did, right? It wasn't a good short. There wasn't much personality to it. Now, because we're seeing the market hold down at these lows after two tries, we have to now, we can't just stay anchored in our previous convictions, right? We have to be able to cut, run, and move on, right? So now we have that strong move down. I was hoping for that two try and then back up, but it didn't happen. So who cares, right? No harm done. Doesn't make you a bad trader at all. If you're wrong, right? What makes you a poor trader, right, is if you trade based on hunches or based on predicting, right? If you waited for that strong move up to be a buyer, you didn't do anything today, right? And that's okay. A lot of times the best position in a market that was this slow and sloppy is no position at all. Okay, so I'm off my soapbox. Boy, I like to get up on that soapbox lately, don't I? Okay, so here's your spiking channel, right? Now, we talked about a spike in channel. We've talked about spike in channels so many times before. The bottom line, though, is when we have a spike in channel, I'm always watching those prior swings, right? Always watching those prior swings. And the goal is to basically get it up. And when you get it up like this, it'll look really scary. It'll look really bullish. It'll pull back. They'll stall out. Bam. And then back down we go again. Okay, and oftentimes these spiking channels, because remember what's happening right now is this. You've got all these bears that sold into that move lower, right? They sold it again. They sold it again. They're selling it again. Everyone is short, okay? There should be no more sellers left to get in this market right now. Between the strong move down and the one pullback, the two pullbacks, the three pullbacks, I mean, sheesh, by now, are there any sellers left without a few contracts short right now? Probably not. Now, whenever we have a situation where everyone is doing the same thing, the only way to trade it is to wait for a correction, right? Because that's the only way to really get people interested in either getting into the market or getting back into the market. You know, for example, right, imagine you're trading short, right? You're short, you're trailing your stop, you're trailing your stop, you're trailing your stop, right? And I'm sure a lot of traders, right, have their trailing stops hanging out, you know, right about here, right? They got their trailers, they're keeping that trailing stop going lower. If we break higher, we're going to run out all of those current sellers, and then if the market fails at the moving average, now those sellers now are going to get back in. Do you see why? Do you see the psychology of this? Right? So after all of these moves lower, we have to assume there's a lot of sellers already in this market. We need to shake them out, right? We got to wake them up. Hey, wake up over there, right? Get back in again. Okay, that will be right. That's a big psychological trick we need to play on those sellers, right? Get them, wake them up, right? Get them back in again. At the same time, right? Let's say you're an experienced trader, right? You sold up here, and you know better than to keep your stop hanging out above those swings, right? Because swings are a horrible place to put your stop, right? You know better than that, right? You keep your stop up here, right? Well, now what's going to happen is if this market pulls back, what's going to happen? Anybody who sold back here, they're going to go, you know what? I have a chance right now to get in on this market pretty much the same price I got in earlier on in the week. Okay, you got me. Twist my arm, right? I'll sell one more contract. And so that will attract more sellers into the market. Is this making sense? Okay? So you're attracting the longer term time frames in, right? Adding more sellers in. You're stopping out all the aggressive scalpers, right? Making them get back in, right? So now we got sellers getting back in. We got sellers adding to their position. And don't forget about those buyers, right? Anytime we get a bear market, we go above that moving average, get those buyers to try to reverse that trend, right? If we see a nice buy pullback there, right? Buyers try to get in now. What happens when buyers get stopped out? They sell, right? And so now we have a chance now to run those buyers out above the moving average, right? Look back there, good example again, right? Similar situation. So now we have sellers getting forced out, they get to chase back in. Now we have sellers getting enticed into the market with a higher price. And then we have buyers getting caught on the wrong side. They become sellers. The buyers are sellers. The sellers are sellers, right? And the market runs back lower. That is the psychology, right, of a spike in channel. That's why I love spike in channels. And that's why it oftentimes jumps up really strong. It'll try, and then bam, right back down to retest that low, right? And possibly, right, a big measured move, right, to crack into the month of March. There's not much down here right now, so we get some wide open spaces waiting on that euro. Could we reverse? Absolutely, we could always reverse. Anything can happen. Be aware of that. Strong move up, pull back to the moving average, strong push through, find that new channel, find that new measured move. Don't chase the move higher, right? Buy that pullback, and you know what they're hunting for, back to that prior high of day. Very, very good example there on the euro, and lots of really great learning and earning opportunities coming up for tomorrow. Am I going to see you there with me? I hope so. You know, I'm a little bit biased though. I think we have the best trade room on the planet. Great place to look over my shoulder, learn directly from me in a hands-on, structured, disciplined, motivated environment. If you like this newsletter, you're going to absolutely love my beginner, intermediate, advanced classes and our trade room. You can learn more about those on the website at schooloftrade.com. I'll put all the links in the description of the YouTube video. And while you're here, don't forget, grab a free trial. Right? It's the best free 99 you'll ever spend. Right? Grab that free trial. I'll shoot you an invite to come out and join our free pass in that trade room session. And you guys and gals, right? Don't forget tomorrow, brand new month, right? Brand new month. Watch that midnight Eastern time opening bell or start of the new month. I'm expecting a very good month here this month of March. I hope you guys are with me on that. Don't forget, tomorrow is Thursday. Be back in the action tomorrow evening. Another newsletter. If I don't see you guys tomorrow morning in the trade room, I'll see you guys same time, same place tomorrow. In the meantime, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.